Rich Dad, Poor Dad book series, which have sold over 26 million copies worldwide. Welcome back, Robert.
Thank you.
I wondered if we could begin with this latest in the housing market, the foreclosure freeze scare. You know, thousands of mortgages tossed together in this foreclosure pool, if you will, without proper documentation. Now it seems that nobody knows who owns what. It's quite a scandal.
Well, in 1997, I wrote in Rich Dad, Poor Dad, this is 13 years ago, I said, your house is not an asset. And what really is the asset is the mortgage, your ability to pay it. Now, when somebody can't pay it, that mortgage turns into a liability. So right now, since nobody knows who owns what mortgage and who to pay the money to, you have guys just defaulting on their mortgage, and the banks are so screwed up, they can't even find the guy not paying their mortgage. I was at dinner the other night, and the waiter comes up to me and he goes, hey, can I ask you a personal question? I said, yeah. He says, I haven't paid my mortgage in 18 months. What should I do? I said, well, you're so far behind now, you're probably ahead. I'm not an advisor, but, he says, but my mortgage is much greater than my house is worth. And I said, well, only you can decide what to do, but, why pay for something that's not worth it anymore?
Exactly. We're getting calls in here at the show, Robert, and emails as well, right along those lines. And, some folks are saying, look, my wife and I, we've paid religiously over the years, and now we're falling behind, and I'm worried about losing my job. She's the breadwinner now. Should we wait for things to get better and for the market to come back? Or should we just try to get what we can for the place when we're deeply underwater? Things may not snap back as quickly as they expect. And then what are you going to do? You want to hold on to this debt shack?
Well, the reason I like speaking to you guys is the real problem is the national debt. And the real problem is the Fed is just printing cash. So why would you pay for something that's going down in value anyway?
Denominated in dollars, right?
Yeah. Like right now, I'm doing extremely well. The 07 to now has been the best years of my life. I've never made so much money. But I'm in real estate. And the reason I'm doing well is because interest rates are going down. When you figure I have maybe, let's say, $80 million in debt, and I can go from 7.5% down to 4.8%, I've made so much money. But and these are rental properties, not my personal residence. And so what's happening is as more people are losing their houses, more people are moving into my apartments. So I'm raising my rents, and I'm decreasing my mortgage payments.
Cost of borrowing has dropped significantly.
Oh, it is staggering. So, the quantitative easing is really working in my favor. But I feel sorry for the people who still, like I said, in 1997, I said, your house is not an asset. And people who are saving money are the biggest losers of all. And these people with these 401ks, they're being robbed by Wall Street. So, so these guys are going to wait for the economy.
Do you have a timeline, Robert, for when things could turn around? Because, most of the people listening to your voice right now, they all are aspiring rich dads. They're trying to decide whether they should pick up one of those foreclosures they're finding online or hold off for another year or two.
Well, I always say, I sell education. And in 1973, I came back from the Vietnam War. My first thing my rich dad said, if you're going to be an entrepreneur, you have to take a real estate course. And the reason you take real estate is not because of real estate, but because you have to learn how to manage debt. So I have probably $300 million in debt that's making me rich. But most people have debt that's making them poor. Now, if I hadn't taken that 3-day course, I would never have learned how to take debt and get rich.
The debt that you've accumulated, my guess is it's throwing off cash flow.
Well, that's all there is in life. I'm 100% finance on multi-million-dollar projects, and I still make cash flow, and I pay zero taxes on my income. Now, that's what you go to real estate courses to learn. But if you think like buying real estate is like buying your home, you know what I mean? My attorney is this really educated guy. He owns his house free and clear. He has no debt, and he's heavily invested in mutual funds. And he's giving me financial advice. But he says, I'm an A student. He said, I'm an F student, but I make more money than you do. Hey, did you see Bernanke on June 10th or something? I don't understand the movement in gold. You're the guy printing the money.
Well, I wonder if we could talk a little bit, though, more about the typical people out there. I mean, they've been burned by this housing crash. We're talking a 30% haircut. Plus, they were leveraged up to the gills because there was no money down. Right now, they're saying that 99% of homes are being underwritten by the three Fs, Freddie, Fannie, and the FHA. Of course, throw the VA in there and Ginnie Mae as well. And you're looking at basically the entire housing market. They only require 3 or 4% down payment. Aren't we going to have to get back to the more traditional 15, 20% down payments before this thing turns around?
I don't think it's going to turn around. I mean, what I'm saying is, I'm saying the economy has moved on. This is the new economy. And in the new economy, like I wrote in my last book, Conspiracy of the Rich, it was about the Fed and all that, which came out before the crash. It was about how money is now debt. And if you don't know how to manage and control debt, you're finished. Bought a house using debt. There's a very big difference between me buying an apartment house using debt. One debt makes me rich and one debt makes me poor. Your house is not an asset. I said this in 1997. And our school systems, I wrote in Conspiracy of the Rich, is not an accident. We don't have financial education in our schools.
So then would you say that once a property can throw off a reasonable income, for instance, let's say you've got your eyes on a house in your neighborhood, you feel very confident that you could earn a fair return on your money by renting that property. Would that sound like a bottom in housing to you?
There's those deals every day. I mean, even when the economy was hot, there were those deals. I'm just saying the average person has never taken a real estate course, and they're going out there and they're betting their lives, and they don't know anything. I went to flight school for 3 years before I became a pilot. After 3 years, they said, which aircraft do you want to fly? They take no real estate courses. They don't take any stock trading courses. They don't take any courses in gold and silver or entrepreneurship. And then they go out there and they think they're Donald Trump or George Soros.
They're starved for good advice.
Advice comes from Wall Street.
Yeah, but where can they get, the classes that they need?
Watch CNBC. They have all these, trading courses. They have Flip This House. I don't do any of that stuff. But the thing is here, if you don't understand financial education, you are wiped out. Look, who's paying the highest taxes? Employees, right? Are they going to raise taxes on employees? Absolutely. Who pays the highest taxes? Savers. Who pays the highest taxes? 401k guys. There's a book I came out with. It's called The Cash Flow Quadrant. E's, S's, B's, and I's. E stands for employee. S stands for small business, smart people. And then there's B's and I's. When Obama says he's going to tax the high-income people, he's taxing E's and S's, not the B's and I's. Taxes and debt are supposed to make you rich, not poor. I pay zero tax legally. Why? Because I'm an entrepreneur, I own businesses, and I invest in oil. And I get tax breaks up the wazoo for that. But if you buy stocks, you don't get tax breaks from. 401k is the worst for taxes. And that's what Wall Street doesn't tell you. Because why? They want you to put your 401k money in so they can lend it to guys like me. And that's what financial education is supposed to teach you. There's always two sides of a coin. I've never seen a one-sided coin yet. On one side are the E's and S's, on the other side are the B's and I's. And when you go to school and you get a job and you work hard and you save money, you buy a house and you put it in a 401k, by the government, by taxes, by everything. And so what happens for people is they wonder what's happening. They wait for the economy to go bad. And meanwhile, guys like me are making more money hand over fist using debt and paying no tax legally. That's education.
I wonder if we could talk a little bit about precious metals. Gold up about 11 weeks in a row, at least as of last Friday, with an earshot of $1,400 for gold. And, of course, silver, looking as though it's on its way to the target that you proposed on this show last time, $30. Well, we hit almost $24.90 last week.
It was 17 when I was saying that. Always remember this, because I was old enough to be part of the last bubble that kicked in 79. And if you know what brought the bubble down was they raised interest rates. So as long as Bernanke is just depressing the dollar, what's it at 76%, the dollar index versus the basket of currencies, as long as he's just crashing the dollar and interest rates are at zero when compared to inflation, then gold and silver are good investments. But if he raises interest rates like I think Volcker did, up to 16, 17%, gold and silver will crash.
But, with the economy just barely holding on, and as you pointed out, it looks like the new economy has a unemployment rate of over 9.5%, almost twice the typical unemployment rate before 2008. One wonders if they can afford to raise interest rates.
You're on to why I think gold and silver are good investments is you have to ask yourself, what can the Treasury and the Fed do? What are they going to do is really kind of the question. And if they raise interest rates, you'll see unemployment skyrocket.
Well, I wonder if we could discuss the stock market equities. It looks like the Dow Jones, it's above that 11,000 point. Earnings are coming in much better than a lot of people expected. It seems as though it's those better than expected earnings that tend to keep stocks aloft.
I own millions of shares of stocks, companies I control, I own them. Stocks are for, the reason they're called common stocks is they're for common people. I don't like stocks. They're too manipulated. I don't like stocks. I just don't, because I'm an entrepreneur. I can beat the stock market left, right, and center. And the trouble with stocks is that you have no control of, some guys play precious metals via I have millions of shares of stock, but it's my company. I took a gold company, a silver company, and a copper mining company public. So I control the companies. There's a difference. I'm an insider. So I know what's going on inside the company. If I don't know, then I either rely on these analysts. Most of them don't know what's going on. Stocks are for common people, the common shares. I don't touch